Good morning, and thanks for tuning in to today's Crypto News Podcast. It's been a wild ride in the markets over the past few weeks, and we're here to break it all down for you. I'm joined by my co-host, and we're going to dive into the biggest stories of the day.
That's right. Bitcoin has been on a downward trend, and that's having a ripple effect across the entire crypto space. We'll get into the details in a minute, but first, let's take a look at the numbers. Bitcoin is trading below $83,000 for the first time since early November. What's behind this slump?
Well, there are a few factors at play here. One of the most interesting developments is that the mining difficulty for Bitcoin just got a little bit easier. According to data from CoinWars, the network's difficulty fell from over 114 trillion to 110.5 trillion on Sunday.
That's a pretty significant drop, but what does it mean for the long-term prospects of Bitcoin? Are we looking at a trend that's going to continue, or is this just a blip on the radar?
From what we're hearing from experts in the space, this trend is unlikely to continue. The mining difficulty is closely tied to the overall health of the network, and as the price of Bitcoin continues to fluctuate, we can expect to see the difficulty adjust accordingly.
That makes sense. And speaking of fluctuations, there's another big story that's been making waves in the crypto space. Bybit and safe custody are at odds over who's to blame for a massive $1.5 billion hack.
Yeah, this is a big one. Bybit released a forensic review that claims the exchange had no security vulnerabilities, but safe custody is pushing back, saying that Bybit is responsible for the breach.
This is starting to sound familiar. Didn't we see a similar situation play out between WazirX and liminal custody last July?
Exactly. That was a $230 million exploit, and both parties were pointing fingers at each other. It's clear that there's still a lot of work to be done when it comes to securing these massive exchanges and custodial services.
Absolutely. And that's a theme we'll be exploring throughout this episode. How can we build trust in these institutions, and what steps need to be taken to prevent these kinds of hacks from happening in the future?
We'll be talking to some experts in the field and digging deeper into the details of this Bybit and safe custody situation. But for now, let's keep an eye on the markets and see how this all plays out.
Building on what we discussed earlier about the environmental impact of crypto mining, it seems like the energy crisis is only intensifying. We just got word from Mara that Bitcoin miners drawing power from grids will face a reckoning post-next halving.
That's right. The rising energy costs are becoming unsustainable for many miners. Mara predicts that those still relying on traditional grid power may not survive the 28 halving event.
This is especially concerning when you consider the environmental implications. We've talked about the need for more sustainable mining practices, but it seems like the economic pressures may be the catalyst for change.
Exactly. It's a matter of adapt or die. Miners will need to find alternative energy sources or risk becoming obsolete. It's not just about the environmental impact. It's also about economic viability.
Speaking of economic viability, Nvidia just posted record Q4 revenue. The company's earnings topped expectations, driven by demand for artificial intelligence chips.
That's a massive jump. Revenue was up 12% from the previous quarter and 78% from a year ago. It's clear that Nvidia is riding the AI wave, and it's paying off.
What's interesting is how this intersects with the crypto space. We've seen a surge in AI-powered crypto projects, and Nvidia's chips are at the heart of many of these initiatives.
That's right. As the demand for AI chips continues to grow, we can expect to see more overlap between the crypto and AI industries. Nvidia's success is a testament to the potential of this intersection.
I think this also speaks to the broader theme of innovation in the crypto space. We're seeing more companies explore new use cases and applications, and that's driving growth and adoption.
Absolutely. It's an exciting time for the industry, and we're seeing the boundaries between crypto, AI, and other emerging technologies start to blur. As we move forward, it'll be interesting to see how these intersections play out and what new opportunities they create.
And as we look ahead to the next halving event, it's clear that miners will need to adapt to stay afloat, whether it's through sustainable energy sources or new technologies. The pressure is on to innovate and survive.
That's right. The clock is ticking, and we'll be keeping a close eye on developments in the mining space as we approach the 2028 halving. It's going to be a wild ride.
We just finished discussing the potential implications of the U.S. presidential election on the crypto market, and it seems that one of the biggest winners Dogecoin has quickly become one of the biggest losers.
That's right. After surging in value following the election, Dogecoin has given up nearly all of its gains. According to CoinGecko data, the coin is now trading for just over $0.20 after falling below $0.20 earlier this week.
This is a pretty significant drop. Of the top 20 digital coins and tokens by market cap, Dogecoin is effectively tied with Solana as the biggest loser. What do you think is driving this decline?
It's hard to say for certain, but it's possible that investors are taking a step back and reevaluating their positions after the initial excitement of the election wore off. We've seen this kind of pattern before where a coin surges in value based on speculation, only to correct itself later.
That's a good point. Building on what we discussed earlier, it's clear that the crypto market is highly sensitive to external factors, including politics and regulation. Speaking of regulation, the FBI is seeking help from the crypto industry to track and block transactions related to the Bybit hack.
Yes, that's right. The FBI has reiterated North Korean involvement in the hack and identified the activity as traitor. They're asking for help in tracking and blocking transactions intended to launder the $1.5 billion stolen from Bybit.
This is a significant development. The FBI's request for help highlights the ongoing challenge of preventing money laundering in the crypto space. What do you think the industry can do to help prevent this kind of activity?
Well, for one, exchanges and other industry players need to be vigilant in monitoring transactions and reporting suspicious activity. Additionally, the development of more sophisticated anti-money laundering tools and technologies will be crucial in preventing this kind of activity.
That's a great point. As the crypto industry continues to grow and mature, it's clear that regulation and compliance will play an increasingly important role. We'll continue to follow this story and provide updates as more information becomes available.
And in the meantime, it will be interesting to see how the market responds to these developments. Will Dogecoin continue to decline or will it rebound? And how will the industry respond to the FBI's request for help? We'll be keeping a close eye on these stories and bringing you updates as they happen.
We were just discussing the market's reaction to the latest Fed meeting, and it seems the downward trend is still in full swing. I'm seeing that Ether and XRP are both down 5% today, while other major tokens like BNB Chain's BNB and Cardano's ADA aren't faring much better.
Yeah, it's been a painful week for crypto, and it's not just us. U.S. equities are taking a hit too. Nvidia's less than stellar earnings report seems to be the culprit behind this latest market dip. But as always, there are some bright spots amidst the chaos. I see that Aptos's APT is up 10% today.
That's a nice jump, and it looks like the Aptos ETF registration in Delaware might be the reason behind it. It's interesting to see how these regulatory moves can impact the market. Building on what we discussed earlier about institutional investment, this could be a good sign for Aptos's future prospects.
Absolutely. And speaking of institutional investment, I've been following the developments on state-level Bitcoin reserve proposals in the U.S. It looks like multiple bills have been rejected, which could be a setback for the plans to invest public funds in Bitcoin.
That's disappointing, but not entirely surprising. We've seen a lot of pushback from lawmakers and regulators when it comes to investing public funds in crypto. Of the 50 U.S. states, over 20 have introduced or are considering legislation related to Bitcoin reserves or investments in digital assets. But it seems like the fate of many of these bills remains uncertain.
Yeah, and it looks like several states, including Montana and South Dakota, have already rejected their respective bills. This could be a significant roadblock for the state-level Bitcoin reserve plans. But we'll have to keep an eye on how this develops. It's not over yet.
Definitely, and it's worth noting that this is a complex issue with valid concerns on both sides. While some lawmakers are hesitant to invest public funds in crypto, others see it as a way to diversify state reserves and potentially generate returns.
Exactly. And it's not just about the potential returns. It's also about the principle of allowing states to make their own decisions about how to manage their finances. We'll have to see how this plays out in the coming weeks and months.
Well, we'll be keeping a close eye on this story as well as the ongoing market trends. It's shaping up to be an interesting week in crypto.
As we wrap up today's episode, I want to connect the dots between some of the key stories we covered. We started with the current market trends, and it's clear that crypto remains weak, with Bitcoin down 2.7% and Ethereum down 4.62%.
That's right. And it's interesting to see how the market is reacting to the Nvidia results day. We didn't dive too deep into the specifics, but it's worth noting that Nvidia's performance can have a significant impact on the crypto market, especially when it comes to mining and GPU prices.
Absolutely. And speaking of prices, it's worth highlighting some of the other movers and shakers in the market. Solana is up 1.26%, which is a nice change of pace from the overall bearish trend. And Litecoin is up 3.39%, which is a significant jump.
Yeah, and it's also worth noting that some of the DeFi tokens are heating up. We didn't cover it extensively, but it's clear that there's still a lot of interest in the DeFi space despite the overall market downturn.
That's right. And I think it's because DeFi offers a lot of potential for innovation and growth, even in a bear market. And speaking of innovation, I want to touch on the story about Pakistan setting up a council to oversee crypto policy.
Ah, yes. That's a really interesting development, especially given the nation's previous stance on crypto regulation. It's clear that governments around the world are starting to take crypto more seriously, and it's going to be fascinating to see how this council shapes Pakistan's crypto policy.
Absolutely. And I think it's a great example of how crypto is becoming more mainstream. We're seeing more and more governments and institutions take an interest in crypto, and it's going to be exciting to see how this plays out in the coming months and years.
So what are the key takeaways from today's episode? I think one of the main things is that the crypto market is still weak, but there are some bright spots, especially in the DeFi space.
That's right. And I think another key takeaway is that governments and institutions are taking crypto more seriously. We're seeing more and more developments like the Pakistan Crypto Council, and it's going to be fascinating to see how this shapes the future of crypto.
And finally, what's the market outlook looking like? It's hard to say for certain, but I think it's clear that the bear market is still with us. However, there are some signs of life, especially in the DeFi space. And it's going to be interesting to see how things play out in the coming weeks and months.
Well, that's all for today's episode. Thanks for tuning in, and we'll catch you on the next one.
And don't forget to follow us on social media for all the latest crypto news and updates. Until next time, stay crypto.